Hey guys, how you doing? Merry Christmas. Today in Hong Kong is the silent night and soon it will be December 24 in America. So Merry Christmas to everyone first, and I hope you enjoy your silent night and the Christmas holiday. 2021 is nearly over, right? Just 1 week. And this year is unforgettable, right? Because of the COVID-19 been already for 2 years, and I hope it will be soon will be over in 2022, maybe in the first quarter or in the upper year, right? We hope it's over. It will be over very soon, right? Today we will not talk about performance, right? Because actually we talk about performance every program. Today I will talk about a lot of readers then in Hong Kong, then they ask me, all of us know warrants, rule number 1 and rule number 2 of investment. Don't lose money. Actually, rule number 2 is just to reinstate for the importance of rule number 1, right? A lot of readers then they left the message to me and they said, I know, but I'm still losing money. I know, unless I'm stop investing, then I'm still losing money. Then how to do that? I tell you my performance in this year. I invested about 10 or maximum 11 stocks in 2021. I have a little bit loose on 2 stocks. One is Stone Company, one is PayPal, just a little bit. But as a whole, I win. To me, maybe not to you, everyone is different. To me, investment is to beat the inflation. So at least your portfolio should every year should have about 4 to 8% increment. Then you can beat the inflation. If you have your apartment, then that's okay. 4 or 5% is okay. If you don't have your apartment, you have to rent, then you need about 8% per year, so you can beat the inflation. So you can check your performance by your own, right? So today we will have rough look on how. I don't know the others. A lot of people then analyze, right? They analyze. In Hong Kong, in the newspaper, in the internet, they analyze on how to win money, how to help you to win money in the stock. But actually, some of them, what they're talking is just a theory. Their saying may not be wrong. It may not be wrong. Some are wrong, some are correct, but that will kill you if it is not their real experience. So I want to share with you how I can achieve Warren Buffett's rule number 1: do not lose money. I cannot guarantee that you will not lose money on every stock you invest. But by this kind of rules, these rules for me, it's not developed in one day. It developed over 20 years. And I proved that those rules, those regulations is workable in Hong Kong and United States stock market. I didn't test it in India, in Japan, in Korea, in Taiwan, no. But I tested it in Hong Kong and United States stock market. They work. So this is real. This is not a theory. This is my experience. So I want to share with you today. So maybe it's can give you a little bit help on that, right? Okay, then our Falcon portfolio, and these 2 days the United States stock market rebounded a lot, right? So our Falcon portfolio been increased back to 92%, right? In actually should be 23 months. So if you want me to discuss on any stock or any stock discussions, then you can email to me by US Stock Market Weekly @gmail.com, or you can leave your message under the YouTube. So Merry Christmas 2021, right? And next Friday or next Saturday for our next program, then it will be 2022, right? So time flies very quick. This is our Falcon portfolio. Then we only have 5 stock in our free portfolio, only 5, right? You can see that. The latest one we brought in is AMD, April of this year. All others are very old stock, right? Some we bought it in 2019, 2020, and 2000 whatever. So it just quite a few transactions. So you can see all of them still increasing. We have last year 55% increment, and this year we have 22. I think that is really the final, because I think the hedge fund managers, right, the unit trust fund manager, they already go for holiday already, right? So I think that's it, really the final of this year. We'll see just 1 week, right? So this is the covering, right? Merry Christmas 2021 first. How to achieve Warren Buffett's rule number 1. That means rule number 2 the same. So yesterday, Dow Jones been rising up for nearly 200 points yesterday, right? And Nasdaq rised also about 130. So it is not far from the peak. The peak is just 600 points ahead, just 2 days. So don't worry too much on that. So how to do that? Right, today I'm share some rules been used or developed by me for years. You guys may say I may not be investing in stock. You may invest in real estate. You may invest in ETF. You may invest in mutual funds, right? Whatever. So please look at the first I want to share with you. The first rule is what? Hold a portfolio. A lot of people that they have a goal. My goal is to beat the inflation every year. Very primary goal is to beat the inflation every year. And then second, we have a plan. How to do a plan, right? You have plan, right? If you don't have plan, then no use, right? A lot of people, a lot of investors, they have the goal. Don't tell me that you just want to earn money. This is bullshit, right? Your goal has to be, your objective has to be precise, right? A lot of people have the goal, they have the plan, but they don't have the way how to do it, and they can't hold it for long. That means they cannot execute, and then they cannot evaluate, and then they don't know how to do when the market tumble down. This is the circle, right? This is the circle, right? So the third is when you have a objective, when you have a plan, how to do it. The first is to hold a portfolio. Don't hold a single one. Never hold just 1 or 2 stock for all the money you have. If any of the single stock you're holding is gone, then you're gone, right? Some readers may say, I invest in real estate. Then don't just invest in one apartment, right? Try your best to have 3 or 4 apartments in different area, right? So this is my experience. When we back to stock, hold more than 1 stock, but don't hold too much. Don't hold too much. You hold 20, 30. Don't hold too many, right? You hold 20, 30, no use, right? Why? Because you can't monitor, you can't trace the performance for 30 stock, right? Because you have your job, you have your daily job, right? So hold 4 to maximum 8 stocks for normal people, unless you are very rich, right? Unless you are very rich, right? I have 100 billion, so you can hold 16 stocks, right? But at least hold 4 stocks. At least hold 4 stocks. Maximum, don't hold more than 8 stocks. So actually, you have to pick up the most excellent one in different field. Don't just concentrate in one field. Then if that field tumble down, then you tumble down, right? If you just hold one stock, like Microsoft, many years before, Microsoft gone, then you're gone, right? So that is the experience from me. Don't hold just one stock. Don't hold just one single ETF. You may say, okay, I hold an ETF. ETF has a lot of stock inside, right? But if that ETF close, then you close, right? So hold 4 to maximum X stock, right? This is appropriate numbers, right? Trust me, I did it before. That's working. Second, monitor the business first, not the finance situation. You have to know what is the business that company is in. You have to study, oh, how about the chips? How about the semiconductors? Or how about the mobile phone? How about the, like Costco? How about the supermarket situation now in the States? Or maybe you like Facebook, how about the social media? So you have to monitor the business cycle to see what is the business that company is in. It is still in a good shape. It will go for a good direction. That is more important than the financial analysis. Trust me. If you just analyze, depends on the financial performance, but you never look at the business, then you lose. I said it for so many times. If only you are excellent in the financial analysis, then every auditor become the god of the stock, right? Right. So the main point is, what is the business situation? Who is their competitors? Are they still in a good shape? Like China. Previous China is going up very fast, but now it is not the world's manufacturer anymore, so it goes down. You have to know that, right? If you're not knowing that, you still invest a lot, then you lose, right? If you only invest in China, then you lose, but you don't know the reason. Or after you know the reason, like the SoftBank, then you already lost 30%, right? So monitor the business of the company first. So at most, 8 stock, 8 different business is the maximum. I can say 4 to 6 for beginner is okay. This is the second. Third, financial report. So on the financial report, if you look at our program, then you know how I analyze, right? So you have to look at if the revenue has an increment, and then have a related net income has the same increment, and then the debts, right? And then the debts, and then the cash on hand. That's it. That is the most basic one you need to know. You do not need to know very detail, right? Don't go into very detail of the financial report. No need, right? You just need to know those. Have the appropriate increment. That's okay, right? Remember, need to have the increment. If they stand still, then no use, right? So another is the price to earning ratio. You have to monitor it. When you look at our portfolio, at the right hand side, there is a PE ratio. It will update it by Google automatically. If the PE is too high, show some. Then what is high, what is low? That is the next question, right? So if you want to know what is high or what is low in the PE ratio, you can have 2 indicators. First, is it in same pace as the net income? In general, if you have 20% annual net income increment, the maximum you can have for the PE is about 50, about 2.5 times. Or you can compare to the same industry, all right? So for some stock, they have the PE ratio over 100, 200, 300. That is definitely too high. So what you should do, show some percentage. I'm not asking you to show all, but show some percentage. And the main point for you to show the some percentage is to take back the capital first, right? When the PE goes high, that means the share price goes high, right? If you buy it at 10, now it's 20, then you sold 30% or so half, then you have no cost. It's very safe already, right? If you rise it 2 times, but like the Tesla, then you show half of it, then you have 100% profit, or even have 150% profit. Then yes, you can leave the others, right? Leave the rest. No need to take about no need to see about that because you have no cost, right? So this is very important for you. If too high, show some percentage. In the contrary, if that stock behave very good, no one notice it, and the PE is exceptionally low, then you can buy more a little bit, right? The same theory, right? And remember to take back the capital first, right? This is a very important rule. And this is the most important part to me. You can see if you can do it on your portfolio, just for you to reference. I have a rule for myself, right? Show the stock when it drops more than 20% from the peak or from your purchased price. This is the rule to me. You can adjust it, but don't adjust it to 5%. Then you have to show every stock, right? And don't adjust it to 50%. That is no use because you lost 50% already, right? So show the stock when it drops more than 20% or the percentage you think is workable to you from the peak or from your purchased price, unless we have an exception. You have a very good reason. This is not your stock's problem. This is the market problem. What is the exception? Lehman Brothers. It won't happen every year, right? It only happens every 10 years, right? COVID-19. This is some reason that you should tell yourself it works. It's the real reason. It's not the reason that I like this stock. I buy this stock at 20% price less than I lost. Not the reason. The reason is the market's reason, not your own reason, not the stock's reason, right? Everyone drops, not only your stock. And another golden rule is if you want to sell, you think the situation is not good, sell immediately. If you want to buy and you have your own reason, you have the good reason, buy immediately. Don't wait. Especially when it is in the start of a bear market. Right? Don't wait in the bear market. If you want to sell, sell immediately. Sell all. And then close your eye. Don't look back. If you wait, if you wait 2 or 3 more days, it will drop another 20%, 30%, then no point for you to sell already because it dropped 60%, right? So if you want to sell in a bear market and you can see the stock dropping very quickly, drop immediately at the intra price. Don't wait. Right, like the Stone Company. When we saw it, the performance is bad. It's because of the credit of the bad debts. I sell immediately. So I still have a little bit loss on the Stone Company, but just 1% to the portfolio. Even the PayPal, we just lost 1% in the portfolio. It won't kill you, right? You can calculate for X stock, right? For X stock. And another I forget to mention is I will not allow any single stock to have the total value more than 20% of the whole portfolio. That means if my portfolio is $100, I will not allow any single stock to have the total value more than $20. So how about if it rise up very sharply, like the Tetron in Hong Kong, then I will sell a little bit to maintain it at 20%. Because if like that, when this stock gone, then you have a huge loss to your portfolio, like Cathie Wood. So this is my rule, and it works. It works in Hong Kong stock market and American stock market. This is my experience. And the final one is when you are still green, you don't have how to say, you don't have a lot of experience, right? Then you are still scared when the market tumble down. Do not try to hold a falling knife unless you are very familiar with the stock, right? Or you work in that company. Don't try to do that. I tried to do that in the Lehman Brothers, then I heard, right? It's no point for you to do that if you are green. A lot of people that they make the dip at the very beginning, and then they find out the stock down for further 20 or 30%, right? Don't guess the dip. Don't guess the dip. When it arrives at the bottom, then you will know. Do not try to hold a falling knife when you are green, or even you are experienced like Warren Buffett or Hong Kong's Li Ka-shing, right? Or a lot of the unit trust manager. You will not have the confidence that that is the bottom unless you look back. So do not try to, you don't need to do that, right? Because your only objective is to beat the inflation. So why you need to do so skillful work, right? It's not the work unless you have enough experience or enough knowledge on that stock, like the PayPal. PayPal 185 or 190 should be the bottom already. But I'm still ask my readers not to buy the dip because we don't know if the performance will become good in the next quarter unless we can see, right? I know it is a dip from my experience, but if the business is still bad, then why I buy it, right? So that is my reason. So unless you are really very familiar with the stock, don't try to hold a falling knife. You don't need to do that if your objective is just to beat the inflation. No need, right? Remember that. Okay, then we share up to here. Then I hope it's a little bit helpful to you, right? So if you like this video, then please give me a like, your comment, and then share to your friends. You think it will be helpful to them, right? So please help to press the subscribe and then press the bell icon next to it. So whenever there is a new video uploaded, then you won't miss it. Okay, everyone have a very peaceful Christmas. Next program will be 2022. See you next year. Bye-bye.